There's a moment in every great market move when the music starts to fade. Most traders don't hear it. They're too busy celebrating, too busy counting profits, too busy believing the trend will last forever. But the professional, the real operator, hears it clearly. It's not loud, it's subtle, like a shift in the wind before a storm. The tape begins to speak a different language, and if you've trained your mind to listen, you'll know exactly what it's saying. The trend is about to reverse. That lesson cost me millions to learn. I've seen powerful bull markets that seemed unstoppable turn into brutal bear markets in a matter of weeks. I've watched the public chase prices to the sky, only to be wiped out when the same forces that pushed stocks up suddenly turned against them. Every fortune I made came from catching a major trend. Every fortune I lost came from ignoring the signs when that trend began to die. Markets move in cycles. They rise, they fall, and they repeat the process endlessly because human nature never changes. Fear and greed don't disappear with technology, faster news, or new indicators. They just find new ways to express themselves. But if you learn to recognize the three perfect signals that a trend is nearing its end, you'll never again be caught holding the bag when the market turns. The first signal is the most deceptive because it hides behind excitement. I call it the exhaustion of momentum. In every strong trend, whether up or down, there comes a time when the movement becomes too one-sided. Everybody who wants to buy has already bought. The latecomers rush in, the headlines scream about record highs, and the public finally believes the move will never end. That's the moment professionals begin quietly distributing their holdings to the crowd. You'll see this on the tape if you know what to look for. The stock keeps making new highs, but each rally is weaker than the last. The volume expands on up days, but not enough to push prices much higher. Then, on the pullbacks, the selling suddenly becomes heavier. The tape feels heavy, even when the price is rising. That heaviness is the first whisper of change. When I was trading in my early campaigns, I made the mistake of confusing exhaustion with consolidation. I'd see a market slowing down after a long advance and tell myself it was just catching its breath before another leg up. That kind of thinking cost me more than any bad call I ever made. What I learned is that strength must prove itself with fresh energy. If the market can't follow through after a breakout, it's warning you that the demand has run its course. I remember one campaign vividly. It was a leading stock during a roaring bull market. It had climbed steadily for months, and I had been in from near the start. The profits were enormous. But then I began to notice something. The stock would rise in the morning and fade by the afternoon. Buyers were enthusiastic early, but sellers grew stronger later in the day. The tape told me that smart money was getting out. It wasn't dramatic, but it was persistent. Within 2 weeks, the trend that had carried my fortune reversed completely. Those who ignored the exhaustion lost everything. The second perfect signal is the breakdown of rhythm. Every trend has a natural tempo. It breathes in patterns, advances and reactions, rallies and dips, each with its own cadence. As long as that rhythm continues, the trend remains intact. But when the rhythm changes, when reactions become deeper or rallies weaker, it's a sign the underlying balance has shifted. This is where most traders lose their discipline. They grow attached to the trend and start making excuses for the change in behavior. They'll say, "It's just a correction," or "It's shaking out the weak hands." But the tape never lies. When the rhythm breaks, something fundamental has changed. I learned this lesson during a campaign that began perfectly. The stock moved just as expected, steady rallies followed by orderly pullbacks, each smaller than the last. Then, one day, a pullback came that was larger than usual. It cut through previous support and took longer to recover. I told myself it was nothing, that the market was healthy. But the truth was staring me in the face. The rhythm was broken. A few sessions later, the stock tried to rally but couldn't reach its previous high. That was the confirmation. The uptrend was over. I got out. A week later, the real decline began, sharp and merciless. I escaped with profit while others refused to believe the trend had ended. That's the difference between survival and ruin, recognizing the break in rhythm before it becomes a collapse. If you want to understand rhythm, study how a stock reacts to pressure. Strong markets rebound quickly after dips. Weak markets struggle. The best indicator of strength is not how fast a stock rises, but how it behaves when it's tested. If a market no longer responds to good news or starts falling on light selling, the rhythm has turned against you. That's your warning bell. The third perfect signal of a reversal is the violation of character. Every stock, every market, every trend has a character, a way it moves, behaves, and reacts. When that personality changes, the move is nearing its end. You can sense it if you've watched the tape long enough. A stock that once advanced smoothly begins to swing wildly. A quiet uptrend turns volatile. Or, in a bear market, the panic days stop producing new lows, even when the news gets worse. The market stops responding the way it used to, and that's how you know the psychology has shifted. I remember watching a stock that had been in a perfect uptrend for months. It would climb gradually, pull back slightly, and then push higher. Then, one day, it made an enormous jump, much larger than usual. The crowd cheered, thinking it was the start of a new acceleration. But to me, it was a violation of character. That stock never made moves like that before. It told me that speculation had taken over, that the last stage of the bull move had begun. I started selling into that strength. A few days later, the market topped out completely. The same traders who bought that final surge were trapped. They mistook a climax for a breakout. The difference between the two is simple. A breakout is the beginning of participation. A climax is the end of it. Character is about behavior, not numbers. A market that ignores bad news near its lows is forming strength. A market that ignores good news near its highs is forming weakness. Learn to watch the tone, not just the trend line. The psychology always shifts before the price does. So, to recap, the exhaustion of momentum, the breakdown of rhythm, and the violation of character, these are the three perfect signals that a trend is about to reverse. But knowing them isn't enough. You have to train your emotions to act on them. I've seen traders recognize every one of those signals and still do nothing because they were too in love with their position. They told themselves stories. They waited for one more rally, one more push, one more confirmation. That hesitation always costs them. The market never announces the top or the bottom, it only whispers, and those whispers are what I've just told you. Once you understand these signals, your greatest enemy becomes yourself. You'll feel the pull of greed when you should be cautious, and the grip of fear when you should be confident. Your mind will try to convince you that this time is different, but it never is. The conditions may change, the tools may evolve, but human behavior stays the same. In my time, we didn't have charts filled with indicators or machines trading at lightning speed. We had the ticker tape, and we had our judgment. But judgment, if trained properly, is all you need. The market still moves today for the same reason it moved a century ago, because people overreact. They believe trends last forever, that prices will rise or fall indefinitely. But no trend survives human emotion forever. The end of every great bull market is written in the same language: enthusiasm, overconfidence, and denial. The end of every bear market comes with despair, exhaustion, and disbelief. When you see those emotions reflected in price action, when the crowd starts acting as if nothing can go wrong or nothing can ever improve, you're standing near a turning point. In one of my greatest campaigns, I learned to trust these signs above all else. The tape began to feel unnatural. Moves that once followed through now faded quickly. The rhythm broke. The excitement grew manic. I liquidated my position completely, even as others mocked me for leaving too early. 2 weeks later, the market collapsed. That decision preserved not only my profits, but my confidence. Because once you ignore the signals and get caught in a major reversal, it takes months, sometimes years, to rebuild the courage to trade again. The most dangerous thing in speculation is not being wrong. It's staying wrong. A trader who admits error can survive. A trader who refuses to see reversal signals is finished. That's why you must treat these signs with reverence. I often tell young traders that the market is a mirror. It reflects your own strengths and weaknesses. If you're patient, the market will show you where the pressure is building. If you're impulsive, it will show you how quickly you can destroy yourself. These three reversal signals are not just technical observations, they're emotional ones. They reveal how human nature shifts from confidence to doubt, from doubt to panic, from panic to opportunity. Every trend contains its own destruction. It's born in disbelief, matures in acceptance, and dies in euphoria. If you can learn to recognize when euphoria begins, you'll never again be a victim of reversal, you'll be its beneficiary. When I think back on my best trades, they all share one common trait. I got out when the signs appeared, not when the news confirmed it. The tape always speaks first. The newspapers arrive later. You don't wait for the world to agree with you. You act when the market's behavior shifts, and you act decisively. That's what separates the trader who lasts from the one who disappears. Most traders are so focused on getting in that they forget to look for the moment to get out. But real wealth in speculation comes not from entry, it comes from timing your exit before the trend collapses. So, watch for exhaustion, watch for rhythm, watch for character. Those three together will tell you everything you need to know about whether a move still has life or whether it's gasping its last breath. And when you see them, don't hesitate. Sell when others still believe. Buy when others have given up. The courage to act on reversal signals doesn't come from luck, it comes from experience, from scars, from learning to listen when the market whispers. Every great trend ends the same way it began, with emotion. The crowd will always be late, but you don't have to be. Learn to listen, learn to act, and learn to protect what you've earned. Because in this game, survival is the real victory, and those who master the art of recognizing reversal signals are the only ones who truly survive.